Good morning and welcome to the November 5th, 2021 edition of News from the Front Lines of Business. We're going to help you know your numbers, and we're going to spend a little time talking about some tax planning and other investment topics. But please remember that this advice is not intended to be specifically targeted to you, so in no way is this any kind of specific recommendation. Be sure to seek out your own counsel and advice before implementing anything that you learn here. Okay, so this week we have a lot going on. Definitely going to see some more news coming up from the Build Back Better Act. But before we can jump into that, we'll have our fun with numbers. And this week it's 246. So next week, 10 November of 2021 is going to be the 246th anniversary of the Marine Corps. So you'll see probably a good bit of Facebook posts from me and the rest of my brothers out there, but it's a good time, good festive times coming up here. All right, so news in the front. So we're still seeing issues with the from last week. So that recovery rebate miscalculation, we're still seeing a bunch of that. Still got some year-end tax planning coming through, so you probably have seen my other email with more general business items, but we are going to have another one that's more specific to this debt opportunity zone that's coming up as a deadline on one of the particular items. And additionally, I've been spending time with the all the different Stoic philosophers and productivity. I do that I'm constantly learning and trying to share stuff with y'all that's helpful. So I'll share something I learned about productivity from the Atomic Habits books by James Clear. So anyway, to I guess expand a little more on that issue with the recovery rebate miscalculation letter. So IRS is now up to about 12 million of those letters that were out. So they've been sending them out kind of fast and furious. I did put a link to a pretty good recap of that on YouTube, but the gist of it is some people mistakenly on the 2020 tax return did not account for recovery rebate credits and stimulus payments and that sort of thing, and it looked like they were trying to double dip and claim it again on a tax return. Sometimes the letters are just wrong and then they correct themselves later. There have been many cases where the taxpayer just didn't put in the right information, but the letters are confusing because they don't tell you, the taxpayer, what exactly it is that is being adjusted. So this miscalculation where the IRS kind of corrects math errors. So ordinarily it's like if you are typing in stuff into TurboTax or something like that, and you typed in a 6 where it should have been a 3, or some kind of typo. Rather than go through the whole process of assessing a penalty and all that, the IRS will just correct those kind of things. The things that they know about, they will just correct them automatically. And that's the case with these recovery rebates. They just kind of correct them for you automatically based on the information that they have. But when they send out the letters, they don't tell you exactly what it is. So you're getting this laundry list kind of possibilities. It could be anything from a improperly claimed dependent to a simple typographical error to a handful of other things with residency and whatnot. And as a taxpayer, you get this stuff and you don't know where to even start. So some people just disregarding a letter and sending in the payment. Some people just confused and don't know what to do because it's very unclear what it exactly is. So you basically got to go back and audit your own tax return in order to respond to the message. So that's not good, and it's confusing, and it's still going on. So if you receive one of these, let us know. All right, so the next thing we'll talk about on the item number 2 here, this year-end planning alert regarding opportunity zones. So I guess to back up a little bit here, so opportunity zones are geographical areas laid out that have some sort of disadvantage. Maybe it's a area that's fallen on hard times for whatever reason. And the government is trying to incentivize people to invest here and rehab properties, basically, and start businesses. So they'll provide some capital gains exclusions in order to kind of encourage people to come in here. So there's 3 parts to this opportunity zone investment. And the way it's designed to work is that if you have property in something that's not an opportunity zone, so that could be stock market gains, that could be another property in a different area. If you have those things and you can hold them for a while and have capital gains built into them, what you can do is sell that piece of property and take the proceeds and reinvest it into something that falls within the opportunity zone. And by doing that, you don't pay tax on the capital gain that you just realized, which is good. And you have these other possibilities for future capital gains to also not be taxed. So, an example where we had a property, let's just use round numbers here and say we had $100,000 worth of gain in a property. So you sell it, you take your $100,000 worth of gain, and you put it into a qualified opportunity zone investment. You don't pay tax on that 100,000, and if that money sits in there, that one piece of the pie, that $100,000 piece, if it sits in that property in that investment for more than 5 years, you get a step up in basis. So at some point down the line, you are going to have to pay tax on it, but not very much because you're going to not as much because you're going to be able to reduce that gain by 10. You're going to reduce the gain by increasing your basis in the property by 10%. So, but I guess the problem is that provision expires December 31st of 2026. So, if you are considering deferring gain by utilizing a qualified opportunity zone, that component of gain exclusion won't be available after 26. So basically, you got to get that deal done before December 31st of 2021 because that was a 5-year holding period. All right. So once your $100,000 goes into the property, hopefully it's going to be into an investment that grows. But that's, I guess, one of the other things to consider here is that these are risky investments. So seek out qualified advice before you do it. And there's different mutual funds and limited partnerships. There's all kinds of different ways that you can get into these deals that are probably a whole nother video in and of itself. But so you don't need to think about that too much. So for now, just know that the investment can gain, and that gain, if you hold it for more than 10 years, is completely tax-free. So any gain above and beyond your initial $100,000 that got invested in the example we just discussed would not be taxed at all if you hold the investment for more than 10 years. And currently, there's no problem with that. There's no kind of time limit on that part of it, but the 5-year 10% basis step up on that initial investment that is going to be kind of going away here if you don't act on it. But so a lot of potential here to really sidestep some gains if you get lucky or good or whatever you want to consider when you have a successful real estate investment. And that $100,000 gain can go up quite a bit. And not only are we sidestepping the long-term capital gain favorable rates, but any gain whatsoever. And who knows how capital gains is going to shake out as things are going through Congress now with all these updates in that the latest tax act. So capital gains could be a big problem, particularly if you're in a higher income bracket. So talk to us about that. And productivity. So we talked about our improvement here and how I was trying to get better. So even in our firm, we try and do this. And as a part of a coaching program I looked at earlier this year, one of the books that they emphasized was this Atomic Habits by James Clear. And it's a good book. I would say the first probably 3 chapters are useful. And after that, you could probably do without it because a lot of it starts to kind of rehash things. But early on in the book, probably the first or second chapter, they talk about how these small changes, at the atomic level, can increase your positive results in a massive way as they build on each other. So the 1% better. Here you see that if you just got a little bit better at something every day, and you did to the 365th power, that's a 37.78 times improvement in your total, productivity, whether it's money or efficiency or whatever it may be. If you get worse every day, you pretty much lose everything you've had. So if you're looking at it on an investment standpoint, that $100 would be 100 times 37, basically. And if you got worse every day, your $100 will go down to nothing, essentially. So, small things. And so we're looking at it on our firm. One of the things that we're having a weakness in is training and implementing staff. So I looked at our total workday. In order to get to the 1%, that would involve a 3-minute per staff person training session. So that's something we're going to implement this next week and just try to get a little bit better with some type of short training. So I think, like in my case, I think no matter how busy it gets, I think I should be able to squeeze out 3 minutes per person. So that's 9 minutes a day I got to carve out to improve some of our processes and just work product. So that's what I came up for me. But read the book, see what you come up with. I recommend the first few chapters of the book because it's good, but gets a little repetitive. All right, so closing thought here. So we know every week I try and give y'all something positive. I'm always big on checking the weather for the weekend, and this week, Tour de Paris, one of my favorite cycling events here that we do in conjunction with the Chamber of Commerce here. I've been I'm the leading that committee for since day one now, so this is going to be our 7th year putting on the event. But cycling event down the road in Lower St. Bernard Parish. Weather's going to be 70 degrees when the ride starts with no humidity, no chance of rain. Just a gorgeous day to be outside and just enjoying life in general. So that's where I'll be, and I hope you get out and also enjoy another nice weekend here before it starts getting gets too cold and whatever, and get into all the hecticness of the holiday seasons. With that, have a great weekend, and we'll see you back here on Monday.